President Trump is well into his first 100 days in office. And since then, he's upended the global economic and trade structures like levying tariffs on most countries, including our allies. And he says it's an effort to boost the U.S. economy and bring long departed manufacturing jobs back to the United States. And joining me to discuss this today is Texas economist Ray Perryman. Welcome.
Good to be with you.
Thank you. Okay, well, go ahead and get started here. So the U.S. economy shrank 0.3% in the first quarter of 2025. And that is a reversal from the 2.4% growth that we saw in the last quarter of 2024. Can you talk about the reasons behind that contraction and what that means for U.S. businesses and everyday citizens, consumers?
Sure. Well, basically, it was kind of an anomaly that the gross state product or the gross national product went down for the reasons that it did. In essence, the tariffs have not really started taking effect yet. I mean, the boats are not in the water right now, so it's going to happen pretty soon. But basically, because people were anticipating the tariffs, they built up a lot of inventory, brought in a lot of goods ahead of time, and when you bring in imports, that lowers the gross domestic product the way we calculate it. And that was basically the reason why you had this decline in the last quarter. But it does indicate the combination of that and a lot of uncertainty out there that we are going to feel some real economic consequences from these tariffs.
And as you mentioned, Trump eventually put a pause on most of the tariffs, about 90 days. China's still in play. Do you think that the White House would realistically be able to negotiate those trade deals within that time, or is this something that takes even more time? There are some who argue that a restructuring of our trade relationships was long overdue.
Well, I mean, you can always find situations where you might improve a trade relationship, but no, you can't realistically negotiate 90 very complex trade agreements, each of which covers hundreds or not thousands of goods and services over a period of that period of time, particularly with the level of staffing that's been devoted to it and that sort of thing. Basically, the tariffs are creating a lot of harm. The 90-day pause, although I'm not sure the White House would admit it, but the 90-day pause came about on April the 9th because the bond market suddenly was not buying U.S. debt, which would literally be catastrophic to the global financial system if that were to persist. And that's the reason why we saw them very quickly get together and put the 90-day pause on things.
In recent interviews, specifically the NBC Meet the Press interview, Trump said, quote, "The good parts of the economy are the Trump administration and the bad parts are the Biden economy." As an economist, can you break down what type of economy Biden actually left? And do you think Trump's actions can take our economy where he says they will go? He's saying, give me more time.
Well, no, the bottom line is I think every president would love to take credit for all the good stuff and blame his predecessor for all the bad stuff. I think that's good. Now, the economy, we came into the year in pretty good shape. We had some momentum in the economy. A lot of things were moving forward in a positive direction. And several things have caused that to be disrupted, all of which are attributable to actions that have taken place in the Trump administration. The biggest one was the sudden laying off of people, haphazard things where you'd get rid of people and then realize you had to have them and bring them back and all that. All that sort of thing creates a lot of uncertainty in the economy. And the way people react to uncertainty, Nicole, is basically we do nothing. When we're worried about things, we just don't do anything. And so consequently, economic activity slows down. Companies don't want to take risks. Individuals don't want to make major purchases. All of those things start to happen with the uncertainty. Then you layer on top of that the tariffs. And I mean, we've known this since 1811. It's no secret. The math was worked out in 1811. On the whole, we're better off without tariffs. And without this type of trade, the type of trade regime that he's trying to bring into place, adding those tariffs adds cost to every good, every service. We've modeled a lot of this stuff. And for example, the 25% tariffs he's proposed on Mexico and Canada, those alone would cost our economy, if they stayed in place for a long time, would cost our economy about 2 million jobs. His argument is it brings manufacturing back to the United States. That's not really viable. I mean, a lot of the things we talk about, we simply can't make in the United States. A lot of things, it's more efficient to make them elsewhere. Again, we've tried to look at this as carefully as we can, looking at every industry in the economy. And there's about 13% of all these goods that possibly could be made in the United States. It wouldn't be the best thing to do, but it could conceivably happen. The other 87%, we're simply going to be paying more for. It's like a tax on consumption.
And I was having a conversation a few weeks ago. We were discussing the economy, and you're mentioning the manufacturing jobs and how some things can be made here, but most things are not feasible. But also, there are some industries. Let's say that that AI has taken over what could have been a human job. So it seems like, given where we're at in technology, it seems even more of a stretch.
Well, a lot of people don't realize this, but people say we've lost manufacturing in the United States. We set an all-time record in manufacturing in the United States last year. Well, uh, before the tariffs, we would have probably broken that record this year. We still may break that record this year, but we do it with a lot fewer workers than we used to because of just what you said, the technology. I mean, at one point in time, it was robotic arms replacing people in jobs. At various computers at various times have been able to take on specific functions that individuals used to do manually. Those kind of things that happen. AI is doing some of that now. And there'll be plenty of jobs available in the economy over time, but they're going to be different jobs that require different skill sets and that type of thing. And we need to retrain workers so they're ready for those jobs. But we've had this pattern for a long time. But we are still very much a manufacturing economy, very much a competitive manufacturing economy. But we make the sophisticated things, the things that are very high value added and tend to have a lot of technology and not as many workers as you might find in some of the things like we've had a lot of talk about dolls lately, as an example, or things like that. Uh, we're not economically equipped in this country to make dolls. Uh, the wage structure and the technology simply doesn't work for us.
And I'm glad that you mentioned that, because I do think that's something that does get lost in the conversation, that we do manufacture a lot of things here. It's just, as you said, more sophisticated things requires a different skill set. Do you find that over time, when I guess technology moves on, it's kind of difficult to get people to move with where the industries are going?
Well, there's always a lag in that, and there's always some difficulty and challenge with it throughout history. I mean, you can literally go back to the wheel. I mean, from 5,500 years ago, throughout history, technology has initially displaced jobs, but then because of the applications of the technology, it's ended up creating more jobs than we ever had. And a very simple proof of that is if you look at the world today, we have more technology than at any point in history and more people working than at any point in history. I mean, it has not been a net destroyer of jobs, but the challenge is, as you said, to bring people along. A number of years ago, back when George W. Bush was president, in his economic summit that he held, I was asked to talk about the best thing the U.S. does and the worst thing the U.S. does economically. And my conclusion was the best thing we do is the next big thing. We do those
Hmm.
sophisticated high tech things. We do AI very well. We do nanotechnology very well. We do genomics very well. We do all of those new innovative things very well. The worst thing we've done as an economy over time is retrain people to for the new skill sets that are required. We simply haven't made that investment in our human capital at times that we've needed to make.
And how vital is that we spend money to make sure that that workforce keeps up with what we're talking about? What could that mean?
Well, it's extremely vital because number one, for the individuals involved, it would give them skills that would be in demand in the future. And secondly, if you just stop and look at our economy in broad strokes, uh, we are going to be labor poor. That is short. We're going to have a net shortage of labor structurally for a long time. The baby boom generation has retired for all practical purposes. Many more of them are retiring now. The younger generations that come behind them tend to enter the workforce later. They tend to they tend to move in and out of the workforce more than the prior generations did. Our birth rate in the country is the lowest it's ever been. We're barely reproducing ourselves as a country right now in terms of population. We won't be by 2030, and so basically we need the people that we have in the workforce to have the skills we need to move forward. And so everything from pre-K to investing in those 40, 50-year-old workers that are displaced and need new skills, everything in the education process is very important for our future because demographically, we're going to need all of those folks.
True. And speaking of jobs, U.S. employers added 177,000 jobs back in April. I believe that was past expectations, and average hourly earnings bumped a bit as well. What do those figures signal for this economy at this time? I mean, I know this goes up and down, but
Sure. Yeah. What it signals is we're coming into all this with a fair amount of momentum, and we've seen that for a long time. The job market since the pandemic, since it started coming back from the pandemic, has been remarkably resilient through a lot of different things. Interest rates going up a lot, then coming back down, inflation going up a lot, through all of this, the labor market just continued to add jobs. It's continued to do so. It's going to face some real challenges in the next few months because the tariffs are going to lead to some layoffs. The federal government is obviously going through a transition period. And it's not that we couldn't make government more efficient, but the way we're going about it is not systematic. We're doing things in a haphazard way. That's going to create a lot of dislocations for people. So we're going to face some real challenges in the future, but it tells us we're coming into this with some solid underlying strength in the labor market, which I think is a positive thing.
If we could talk about our state for a minute, Texas,
Sure.
it's one of the largest exporting states in the country, if not the. When it comes to when those tariffs actually kick in, how will our economy be affected?
Well, Texas is going to be affected a lot more than any other state. We are by far the largest exporting state in the country. We have been for the last 20 years or so. We surpassed California many years ago when there was a dock strike in LA Long Beach that lasted for a while, and everybody started bringing their stuff through the Panama Canal and bringing it to the Gulf Coast ports, and they never stopped. And so that's going on. And then the other piece of it is, of course, we have a very large and highly integrated border with Mexico. And we have a lot of production that goes back and forth between Texas and Mexico. We've really stitched these economies together over a period of several decades. And so as a result of that, we are hit harder than other states. And, a few examples. I mean, basically, Texas has a very large energy sector. Virtually everything in that energy sector uses steel and uses a lot of steel. Pipes, rigs, all of those things are basically made of steel. The cost of steel is already showing signs of going about 20% or more because of these tariffs. That's going to have a slowdown effect there. We get a lot of our produce from Mexico. That's with tariffs. That's going to cost more for consumers. Goods like automobiles, electronics, those kind of things that are manufactured back and forth. Part of it will be done in Mexico, part of it in Texas. They go back and forth across the border, sometimes 5 or 6 times in the course of making a single vehicle or electronic appliance or things of that nature. And you start layering these tariffs onto that, and you start really escalating these costs. And so Texas, and of course, obviously we have a huge amount of port infrastructure, and we're already probably in the next week or two going to see those volumes drop off pretty substantially. So all of that combined points to the fact that Texas, for all the strength we have as an economy, part of that strength comes from the fact that we're very much a part of the international economy, the global economy. And so consequently, we're going to be disproportionately hit by these tariffs.
You're a part of these conversations and forums, and I was wondering what business owners in Texas, what are they saying about this? Because we live in a very red state, and they voted for President Trump overwhelmingly. What do they say now, given that we're in this trade war?
Well, I've been in a lot of conversations with people in just about every major industry in Texas over the last 2 or 3 weeks, and oftentimes on a one-on-one on a daily basis with a whole lot of people and hundreds of people when I speak at conferences and talk to them afterwards. And basically, most people supported President Trump in the business community because, number one, they thought they'd get lower taxes, and I think ultimately they probably will if you don't take account of the fact that the tariff is also a tax. But in terms of just traditional income taxes, those kind of things, will get lower taxes and somewhat less regulation, which is very beneficial to some industries. But what they're feeling now is disillusioned. I mean, the folks in the energy industry are saying we simply can't pay this much more for our pipe and our rigs. They're saying, now people in the world are so scared. Demand for petroleum's down. We can't live at these prices. We can't make profits at these prices. The agricultural folks are worried about, how they're going to sell their exports and how much their farm equipment is costing. So I'm hearing from all the industry, the manufacturers, same thing. Number one, they don't like the tariffs, and they recognize the tariffs are bad policy. And number two, again, something I mentioned before, the sheer uncertainty of what's going on right now. I mean, when you have uncertainty, the natural human reaction, whether it's a big business or a small business or an individual, doesn't matter. If you feel uncertain about things, you just kind of sit back and wait till you feel better. And that means you don't hire more people. You don't bring out a new product line. You don't build a new facility. And if you're an individual, you put off buying that car. You put off buying that house. And all of those things, of course, translate into things that slow down the economy. And so what I'm hearing now is is basically folks saying, we want lower taxes, we want less regulation, but this is not what we signed up for.
I've also heard a lot of talk about concern over supply chains if this trade war continues. If and when we start to see our supply chains breaking down, can you talk about how that would impact the economy. I know that we saw that exponentially during the pandemic.
Right.
So I don't, I'm not saying it's going to be that drastic, but people are having concerns about that. What realistically could we see here in the United States?
Well, I think the first thing a lot of people don't recognize, and it's easy not to recognize it, is the fact that we live in a very integrated society and economy right now. The room that I'm sitting in and the room that you're sitting in right now, I will guarantee you something in those rooms comes from 150 or more different countries. I mean,
Mhm.
the world we live in is that complex. The phones we all carry around have goods in them from 20, 25 different countries. Make some piece of what ultimately goes into that phone. Same thing is true of our appliances, our furniture, our lights, or just about anything you want to name. And so as a result of that, when you start ripping those seams apart that you stitched all this stuff together over time, it starts having significant impacts. And supply chains, for example, a whole lot of manufacturing in the United States where we do the high tech end of it, the low tech end of it, that is the all the component parts that go into it, they're made somewhere else. They're made in China. They're made in South Korea. They're made in Taiwan. They're made in Malaysia. They're made in Mexico. And if you start adding to the cost of those things, making it more difficult for those goods to come into the country, then all of a sudden the piece that we do very well, we're no longer able to do. And so
Mhm.
it breaks down the supply chains in that way. Uh, and there's been a lot of talk again about what people may get for Christmas this year, but we get a lot of our toys, a lot of our smaller items, lower tech items we get from a variety of different countries, primarily in Asia. And if we're not able to have those goods brought into the United States, that's going to impact a lot of kids and what they get for Christmas and that sort of thing. So it cuts across a lot of different things, but basically, you might think of it as we really tightly stitched the world economy together over a period of decades, and we're kind of ripping some of those seams right now, and it's not a smooth process to put that back together.
We've also heard some economists warn that if we continue down this path, that we could hit a recession. Is that something that you think is foreseeable, or and if so, can that be avoided?
Well, it could certainly be avoided by not implementing these tariffs in the way that's being talked about. And I think as more and more numbers come out, as the administration realizes more and more what they're doing is not working, I think you'll see that happen. I mean, we've already seen a tariff be announced and then be back off, then they back off on it. They'll announce it, then they'll delay it for a while. They'll announce it, and they'll exempt some industry from it. I mean, we're already seeing a lot of that, and that in and of itself creates uncertainty. But I think they're already recognizing, hey, this is not going to work, and they're looking for an off ramp now, a way that they can somehow declare victory and move on from this. But if these tariffs persist at these levels, absolutely it can cause a recession. I hope that doesn't happen. I think there's a reasonable chance it won't happen. As you pointed out earlier, we are taking some momentum in the labor force and other places into this situation, and that's good for us to hopefully ride out some situations. But it's a serious concern. I mean, the Federal Reserve's warned about it. Most of us in the economics profession have warned about it. This is simply not good economic policy. And as I say, literally, it's not anything new. We've known it since 1811. That's when they figured out this was not good economic policy. The math that was done then has never been contradicted. And so we've known for a long time that this type of policy is not the sort of thing that pushes economies forward.
And speaking of the Federal Reserve, today they voted to hold interest rates steady at the, I believe, 4.25 to 4.5%. What does that signal to you?
Well, it signals it was widely expected. It signals right now there's a lot of uncertainty. The Federal Reserve has a dual mandate that goes all the way back to the Full Employment Act of 1948, where they're supposed to try to have both low inflation and promote economic growth. And they tend to raise interest rates if they're worried about inflation, lower interest rates if they're worried about economic growth. The problem with these tariffs is it can mess up both things because the tariffs
Mhm.
tend to increase prices because obviously you're just literally it's a tax. When you bring a good into this country, it goes into a bonded warehouse and it doesn't come out till you pay a tax on it to the government. They tried to say the other countries pay these things. They don't. We pay them. And so it causes inflation. At the same time, the things you and I have just been talking about, it rips up the supply chain, and it causes costs to increase and that sort of thing, and as a result slows down economic growth. So you have a situation now where the policies we're looking at in the future can literally lead to a situation where we have high inflation and low growth. We had some of that in the late 70s and early 80s, and it wasn't pretty. A situation some people call stagflation. And so the Federal Reserve is trying to balance, and right now they're taking a wait and see attitude, hoping some of the tariffs go away, waiting to see what happens. And so they're kind of just treading water until we get a better indication. Do we need to worry about economic growth? Do we need to worry about inflation? Or hopefully not, but do we have to worry about both of them? At this point in time, there's just simply not enough information to make a call on that.
And speaking of uncertainty and how that can impact the economy, there was a recent, and you had mentioned, Christmas later,
Right.
earlier in the conversation, and President Trump had said something essentially. He was talking about dolls, but basically saying Americans need to learn how to live with less, and and that made a lot of people concerned about what is to come. And I was just wondering what you thought of that messaging coming from the White House, given that people are already concerned. Could that make people hold on to their money even more so and not, uh, you know, buy things and kind of like help keep the economy churning?
Well, sure. I mean, basically, he's saying things can get if we follow my policies, which I seem to want to follow, things are going to get really bad. I mean, that's what he's telling people, and people tend to believe that and recognize that, and obviously, retailers, wholesalers, they're already ordering the stuff we're going to get for Christmas. I mean, that these things take a while to work their way through, and in today's environment, they're not anxious to be doing a lot of that right now. They don't know what the world's going to look like at Christmas. And so, you could end up with a situation where everything's fine, but they didn't order enough. And so we don't have the goods we need. And so anything like that. And I mean, for a president to admit that his policies are going to cause that type of chaos, when there's really not an off ramp at the other end, is really pretty amazing in and of itself. But basically, certainly anything like that, any statements like that are obviously going to cause us to feel a little more uneasy. When we feel a little more uneasy, we're less likely to go out and do things.
And I wanted to ask you, as an economist, what things are you watching out for that your average citizens could also pay attention to kind of keep up with where our economy is headed?
Well, I mean, I think that the probably the numbers that get the most publicity are just fine for that purpose. I mean, we get jobs numbers on the very very early in the month. I mean, literally like we got the April numbers on May the 2nd. I mean, that's a very good indicator that comes out on a pretty timely basis. Uh, Interest rates fluctuate every day, and you can keep an eye on that and see what's happening with that. The stock markets are certainly not a perfect indicator of what's going on, but they are a pretty good indicator of what people think the future looks like. And obviously, you can get that anytime you want to. You can get every minute of every day. There's a stock market open somewhere in the world, and you can see how investors are feeling at this time. Are they feeling confident about the future? Are they not feeling confident about the future? And so you can get those kind of readings on a regular basis. And again, and I think it's probably as much as anything, just talk to people in their jobs and see what their employers are telling them. So, see how they're feeling about things. Are their employers telling them we're not going to have enough stuff to make what we make in 3 months? Or are we getting those? Or are they getting that type of messaging? Just kind of things you do every day. Just maybe tuned in a little more on the economic part of it than you usually are.
And lastly, coming from the White House, there's a lot of wait and see, give us time. But your average citizen they're worried about things that they're facing head on right now and maybe a little into the future. And so I just wanted to ask you, how concerned should Americans be right now?
Well, I think there's a legitimate reason for concern. I mean, basically, what I think will happen is we'll get rid of these things pretty soon because they're such a bad idea, and I don't think they're going to have a lot of staying power. But we don't know that. I mean, at this point in time, the Congress has ceded a lot of that discretion to the president, and which they don't have to, but they've chosen to at this point in time. And so I mean, there's clearly concerns out there. Most people do have to look. They're forced to look at the next week, the next month, the next 2 months, next 3 months, because that's the vast majority of people live in. That's the environment in which they live. And the difficulty with all this is the president talks as if there's some upside a year or two down the road, or 6 months down the road, or 9 months down the road. There's not. I mean, the tariffs are not ultimately going to bring some kind of great economic revolution. I mean, we have centuries of history that support that. They've never been the route to sustainable economic growth. They never will be. And at some point, I think the administration realizes that and tries to soft pedal and backtrack from some of this stuff. The critical question at this point that we don't know the answer to is, when will that happen?
And I think we'll wrap up there. It's a wait and see.
Absolutely, no question.
And for all of you watching at home or listening, if you like this kind of content, news, politics, and current trends, don't forget to like, share, and subscribe.